All right, so I was saying we're not yet seeing the four, and therefore, even though we have them here labeled here hypothetically that they're going to be between 2,500 or between 2,480 and 2,400, this is just a hypothetical projection. In reality, it may not be the case. We may even move higher to 2,600 and have 3, 4A, 4B, 4C between 2,600 and 2,500. So this means that we are not yet doing a correction. This means we should not think about falling all the way to 2160 to a high degree level A. We're still in a trending wave 3 inside of a cycle C. We cannot, if you're seeing this kind of very strong positive momentum on the daily, do a deep retraction. Unless there's a very big fundamental change, you're seeing better global economy, no geopolitical problems, you have need a very big reversal. And of course, we should never, I don't want to be overconfident or sound too confident. We should completely disregard retractions to 2160. We should actually completely disregard retractions below 2350 or 340s. You're looking here at 2324. A very solid support if we ever get to see it, right? Because this is still progressing higher as we move on now to segregate this move. You get to see all the internals on the next chart. On the 4 hours, it does an A, B, and a C. At that point, you're doing, yes, a high degree C, it's a 3, internal 3, an internal 4, and so you get a 5 into that high degree C before you conclude level 3. And so we still get a move at least to 2,480 to 2,500, 560. And that's what we're looking at here now on this 4-hour chart. This is today's. This is updated to show the exact market action. Remember, on the daily, we're looking at an A and a B, and that's where we start the segregation. So we've had an A and a B, we've had another A and a B. We now use trending labels, so we're using 1 and a 2, internal 1 and a 2, 1, 2, 3, 4, 5 in green, 3 and 4. Internally, we just took out the internals. There is a 1 and a 2, 3, 4, 4 probably at that point, and a 5. So there's 5. High degree 3 has occurred. The market has just done an A, has just done a B, has just done a C. This gets to be segregated in more detail on the next chart, I believe on the 30 minutes. We believe on the 4-hour frame, at least leg A into correction 4 is finished. It's doing complete C, complete 4-hour, leg 4 is finished. We just check the daily, and this is the time frame below the daily. And this means that the next move higher, if we have finished leg 4, we're going to be doing 5. We're going to be seeing a new high. The high here was not even 2,400, 2,430. New high, of course, is 2,460, 2,480. The projections between leg 2 and leg 3 give us 2,461 or 2,462, 2,488. We believe on the bounce we're going to be seeing these. We have a breakout on the upside. As already explained on this daily, we have not yet concluded this 3 in green. This 3 in green has done, that 3 in white has done a 4 in white. Has done a 4A, 4B, and a 4C. Technically speaking, we have to do 5. The next leg, of course, into the market to conclude that 3 in green may not take us to 2,600, but at least takes us to 2,490 or 2,479, 2,480. And this is the leg that we will be trading. Of course, this is a head formation. So over here we're showing a head. We have now concluded something like a double inverted head and shoulders. Market should be moving in some kind of an ending diagonal to create the new head all the way to 2,460, maybe higher, 2,480. So you expect a spasmic move. We have a neckline here, we have a neckline here. So it's like we've done a 1 and the 2 and the 3 and the 4 and another 5 swing into 5. Like internal force 1, 2, 3, 4, and 5. Into that wave 5. Right? Leg 1 of that wave 5 must end at the neckline, break above, and then we get to 2, and then we get to 3, and then we get to 4. The distribution has to be between necklines. Exactly which allocated necklines? Probably these 2. But we are going to get 5 swings, we believe. We have something like a cycle extreme on the 4 hours. This is today's 4 hours, and We've just established out of the daily time frame that we have continuation and that the market is not done at 2,400. It's not done, it's not finished. We're still getting another attack of a higher head. Let's take it now to actual trade management. We're looking at the 2-hour chart. We're all familiar with the bounce levels. We're also familiar with the internals. Against a high degree A and a B, internal A and a B of 1 and a 2. 5 swings into that 3. Roman italics are showing in the 5 swings, 1 and a 2, 3, 4, and the 5. High degree 3 is done 4A, 4B, and 4C. We have identical fractals, meaning after doing something like a leading diagonal, market bounces, does a level 1, falls back. You're seeing inverted head and shoulders, market goes higher. We've done the leading diagonal, market bounces 2,400. This is the first target. Wait for a fallback, do shoulder levels, somewhere to 2,360. Continue higher. Of course, this is a wave 3, this is a wave 5. It's only 61.8% of a wave 3, maybe less. Take it now to actual trading. Alright, so we can confirm because of that fractal. Of this fractal, we can confirm that we're going to have some kind of a strong move to 2,400. It just needs any escalation or any macro fundamental to impact gold higher. We're looking at today's 45 minutes. We've been looking at the internal labels since last week. We did this yesterday. I'm sorry, not last week. They're all correct. We have an A and a B. All the internals are really correct. We've had another A and a B in red, a C and a D. I'm relating to the red labels. And then E. So 5 swings inside of that leading diagonal have created wave 4. We have wave 3 up here that's not really showing. This market, as of before NFP release, had already done 5 swings. I've done a 1 and a 2, and turn 1, 2, 3, 4, and a 5. There's a 4, there's a high degree 5, there's been A, B, and C. All this becomes leg 1. Market is just correcting leg 2. That's all. And we have a breakout into leg 3. Remember, this is going to be 5 swings. Breakout into leg 3 is the strongest. And as established on the past chart, on this 2-hour time frame, because of the fractals, breakout to level 3 will take you to 2,400. So we're looking at 2,400. Of course, leg 3 can even break out above 2,400. 2,400, the market high was 2,430. So you can expect the same. And therefore, it's very, we think, of course, it's a bit speculative, but can be, especially on a weaker dollar, we're seeing weaker dollar across the board. Very good opportunity, very important to be into the long. I believe we are already into the long. You just need to have a hedge below the head to protect if we are not already in the long. Our take on it, or could be mistaken, please, everybody would need to do their own due diligence, but our take on it is really, it is very important to be into the long because it takes you all the way to $100 higher, especially on escalations. Markets are made by escalations. The people who have the money online can create such escalations. And therefore, buying today, retractions to 2,310, 2,305. You can take this live, of course, take it to 5 minutes, draw down the retractions, do an accurate entry, but the reality of the situation is anything you buy into this level 1 at 50 and 38.2% is a shoulder level, will take you higher, and you just have to hedge at 2,270. Over here between 2,280 and 2,260. We're looking at this last Friday on the belief that the market has finished leg 1 here, has finished leg 2. This market went higher. Of course, retraction, it's a 1 into 3, and a 2 into 3, and a 3 into 3, and a 4 into 3, and 5 into 3. Remember, we're going to do 2,400. Retraction cannot really fall below level 3. So let's take this live now, add to it, do the entry long, hold it. We're trading gold as a position trade, so we'll attempt to hold at least to 2,360, 370, take profits really long to 2,430. I'm looking at the same 4-hour chart that we were looking at earlier. We see a bounce, of course, out of the 200-point moving average. Let's take it now to 1 hour. We're still very interesting. We could have a bounce here. Again, at the 200-point moving average, but we see a very clear bounce. So let's mark this. So the bounce we're talking about on the 1 hour is very clearly showing here. Especially if we're going to be seeing positive momentum on the shorter term frames. Not really showing yet as a bounce on the 30 minutes. But showing on the 45, let's take it now to 15 and 5. We're still on negative momentum on the 15. We are still on negative momentum on the 5. Not really, we are not on negative momentum on the 5, but we are on negative momentum on the 15. Market is 2,319. Okay, so it's like a cable 1 and a 2, a 3, maybe a 4 and a 5. We don't really want to do the labels to conserve time. But remember that this story about there is a market war going on between bulls and bears. Bulls and bears, yes. So it's showing here. This is the level 1 and the 2, and the 3 and the 4 rejects below level 1. Will still fall back. So the bears win, fall back a bit. Just needs to fall back 50% into the structure. The structure is showing here. So I'm relating from internal 2 to the top of either 3 or 5. Maybe it falls to 2,303 and then reverse and move higher and take out level 1. So if you haven't taken out level 1, you have negative momentum on this 15-minute chart. You still have another leg to go. That's all. Quite simple, quite straightforward, right? And even if we are impatient and do the longs at current levels, we're still able to protect. It's looking like an Elliott channel, really. I would want to think of it like a wedge, but of course it could be an Elliott channel. So again, it's a matter of bulls against bulls against bears. The bulls have a very strong support here. They may fall down to 2,304, 2,302, bounce again and take out that neckline. That's where the bears are actually located. And so it's a struggle in a way. Not that I believe in it, but I believe in levels very strongly. And for us traders, means that you either want to buy the support or break out above the resistance. So break out above the resistance is 2,328. The stop at that point becomes 2,300 or 2,290. So it's just a matter of risk reward. That's all, just $30. Or you wait to the downside, buy the support 2,304, and the stop at that point or the protective hedges is below the market bottom 2,280. So it's the same $30 or $25. That is the point. The risk is always the same if we are doing it right. All right. Of course, on the upside, you kind of have of confirmation, but the risk is still always the same, and therefore we have the luxury to wait at 2,330, for instance, buy stop, using a buy stop. with the hedge at 2,295, 2,300 for $30. Take that entry all the way to 2,370, take profit, wait for a retraction, and then redo the trade all the way to 2,430. If you wish to hold all the way to 2,430, it will just take more time. That's all. Or we fall back again to do the entry at 2,305, for instance. We're going to have a hedge, protective hedge, 2,275, another $30. Again, hold all the way to 2,430, or take partial profits at 2,370 and then redo the entries.